Right, let's move on to banks. Hundreds of thousands of Australians lose their jobs or face financial uncertainty due to the virus. Well, one bank has made it even harder for customers. The Members Equity Bank, a bank set up by 26 industry funds, has removed money from customers' redraw facilities to pay down home loans without their permission, nor, in many cases, notification. Now, of course, it's money they desperately need now, given the economic downturn. To say these mum and dad mortgage holders are gutted not to be able to access their own money, well, that's an understatement. Leading investigative journalist with The Age, the Sydney Morning Herald and the Australian Financial Review, Adele Ferguson, has reported on all of this, and she joins me now from Melbourne. Adele, just make it as simply explained as you can. People would be gobsmacked to think that people having a mortgage in this country have money sitting in their redraw facility, but it disappears on them by the bank.
Yeah, that's right. That's exactly what happened. They're calling it an adjustment due to a computer glitch, and they were supposed to notify their customers, but nobody was notified. So it happened on the 27th of April, and people got the letters on the 30th of April or the 1st of May. Then they tried to call to find out what happened, when they saw that the amount was adjusted, that they could no longer get that money, that on their website of ME Bank is spruiking it, saying, this is what a redraw facility is. You can pay off extra on your mortgage, but you have the flexibility to grab it back if you need it for free at any time. And that didn't happen.
Yeah, look, a lot of people watching at home would know about a redraw facility. It's where you perhaps get your pay paid in. Your pay is in excess of what your mortgage payment might be. That money from your salary sits there for the month. It helps reduce your overall interest, but you're only paying from that amount what you're actually due that month on your mortgage. And if you need that money that's sitting there out of your pay for other things, of course you can get to it. It will worry a lot of people now who have excess sitting in that redraw facility, that they may not get it if they need it, and it could well have been moved without their permission. What's been the response from the bank?
So they're now apologising to people who are actually able to get through, because that's one of the problems. So many people have emailed me and they're saying that they've been hanging on the phone for hours, and then they're told someone who knows will call you back within 48 hours, and they're not getting anyone calling them back. So there's this massive PR disaster that's gone on, and they're just wondering what the hell has happened here.
And I'm looking at some of the examples you had in the story today, $24,000 that someone had that was in excess of what was owed on her mortgage was taken away, and it's now since been returned. Another customer still waiting on $35,000 to be returned. This is a bank that's run by the 26 industry super funds that helped establish it. Do we know if this is happening in any other banking players, with any other banking players? And I've got to ask the question, when the government made the decision to allow people to get access in this COVID-19 climate to some of their superannuation balances, there was a lot of consternation in the super funds that they may not have had the immediate cash reserves to pay out to people, may need to access some of their assets, sell them down in order to pay out their customers. Is this in any way linked?
Well, I did ask that question. It was the first question that I asked. They ignored me on Friday. They're now saying that it's not linked, that they don't have liquidity issues. But the fact is, some of these industry funds have got cash with ME Bank.
So this could, well, I have to say, the timing of it, has it ever happened before? Because that would be another indication whether it is related.
No, well, it has never happened before. And people are saying that with ME Bank, with the last interest rate cut, nothing was passed on to them. So they're really disenchanted with this bank, which holds itself up, by the way, as the bank of integrity, the bank that is basically more trustworthy than the other banks.
And could it be another reason why ME Bank did this too, if they're worried that people are going to lose their jobs in the middle of this virus, if they've got a significant home loan book out there, which they do, that they're perhaps taking this money without the permission of the deposit holder, but they're taking this money because they are worried themselves about whether or not they'll have significant mortgage defaults out of this virus and end up being in some sort of prudential issue.
Well, that is the issue. They're spinning it that they're doing it as a favour to these customers in case they do default due to this computer glitch, that they want to make them compliant now. But who knows? I mean, the point is, I've had so many emails. I've had one woman who said that she had paid 95% of her loan off and they took $24,000, that was adjusted from the redraw account. So how is the likely, and this woman, by the way, is working, what is the chances she's going to default when she's way overpaid her mortgage? That's what I just don't understand.
Right, we'll say across it, the bank says it's all going to be remedied. We'll see. We've heard that story in Hayne before, haven't we? We'll see what happens. Adele, thanks very much for your time.